Good evening, everybody. Thank you so much for joining us this evening. We have received numerous questions regarding the disclosure of Indian income in Australian tax returns, especially related to income disclosure, as well as the property sale and repatriation. Tonight, we have organized this webinar to address all your queries and ensure you understand how this income impacts your situation. Please feel free to add your questions to the chat and we will address them during the Q&A sessions at the end. In the first 20 minutes, I will be discussing a few key mistakes to avoid when disclosing Indian income in an Australian tax return. Following that, we will have a 10 minutes of Q&A session. However, we have received 186 registrations for this event. You may have many questions and we may extend the session accordingly to make it useful for all of you. Happy to answer your queries. First and foremost, we have a disclosure. This presentation should not be considered as tax advice. It is important that you consult your tax agent, lawyers, before proceeding further. Sharing this information can benefit everyone involved. I just want to give you some context about Nobilis NRI taxation. The company is formed in 2015 out of my own frustration in navigating the complex tax rules, both in India and Australia. As an NRI, a chartered accountant and an Australian CPA with an expertise in international taxation, I personally experienced the challenges and complexity to manage the taxes in both countries. Our aim has been to provide a consolidated solution to address these specific challenge, and 8 years of dedicated efforts from my amazing team in Bangalore and Sydney, and we are here today. Mangala is a director and the head of operations in India. And Pranati is a chartered accountant with many years of an experience in PwC, providing a great insight into an international taxation. And we have Neeraj with us. He's an Australian ITR expert. He worked in Melbourne for a few years, and here all of us will try and answer your questions at the end. That is a key thing which we feel. Let us look at the whole scenario one by one. Who has to disclose the Indian income in Australian tax return? Why you need to disclose the Indian income in the Australian tax return? And what needs to be disclosed? So the whole presentation revolves around these three questions. Let us take these questions one by one. Who has to disclose? Permanent residents, citizens, as well as the tax residents are required to disclose their global income in their Australian tax return. Only temporary residents are not obligated to report their worldwide income in the Australian tax office. And let us look at the question number 2, why you need to disclose. Now, you might wonder why this disclosure is necessary. The answer lies in Australian tax rules, which provides no room for choice. It is very clear to comply with these regulations. And one significant reason for this requirement is the bilateral agreement between India and Australia, one of which involves an automatic exchange of financial information between both countries. Under this agreement, Australia receives a comprehensive data from India, including individual's PAN number, income, and related to other assets. Now, you might be aware that PAN and the TFN are linked together, and I'm sure that you all have signed FATCA declarations to the banks. This continuous exchange of information means that even if you keep your funds in India, you are still subject to taxation in Australia. I really understand and empathize that many individuals may not include certain details due to the lack of clarity and so much of confusion surrounding them. In some areas, it is not entirely clear, but when it comes to disclosing this information in ITR, it is essential to adhere to the Australian tax law. It can be challenging to accept the fact that you have already paid the taxes in India on this income and haven't brought those funds to Australia. However, Australian tax law is very clear on this matter, and it must be included in your ITR. At our firm, we have been assisting our clients to launch their ITR in a properly disclosing this information and utilizing a various tax planning strategy to manage and meet the required tax obligation. It provides a peace of mind, knowing that you are doing the right things and more so, avoiding penalty, especially when ATO or the ASTAC eventually does data matching. And this is reality now. Let us look at what needs to be disclosed. So I have categorized the various types of income which needs a disclosure. Interest and dividends are a straightforward cases. Whatever income we have earned, the gross income minus any expenditures pertaining to it should be disclosed in the Australian ITR. Of course, you have to take an exchange rate prescribed by the ATO. When it comes to the rental income, you need to be really careful here. The rental income should be a gross rent minus all actual expenditure incurred, not the net rent you might have disclosed with Australian tax return. Another very crucial point is capital gains on sale of properties in India. Tax planning in India does not necessarily translate into a tax efficiency in Australia. It is crucial to strike a balance between tax obligations in both countries to maximize your foreign tax credit. This is our core expertise, and we have saved a lot of taxes for our clients with our tax minimization strategies. What happens when you sell your properties in India? It is subject to a capital gains tax in India. It is subject to a capital gains tax in Australia. However, there are so many options to reduce the tax liability in Australia by exploring a dual tax exemption rules. Also, to find out how much tax you need to pay in India and how much tax you need to pay in Australia. In some cases, you might end up paying taxes in Australia, and a lot of our clients manage to disclose all this information very efficiently. Mutual funds and shares are taxed differently. Any income from their sale is taxable in Australia. Gift is another aspect. There is no gift tax in India, or there is no gift tax in Australia. You gift the money and get anything in return can trigger a tax liability in Australia. So what we say here is a documentation. A documentation is the key aspects here, and making sure that any transactions without any documentation is not considered as a gift. Additionally, income from pension funds such as EPF, PF are taxable in Australia. When repatriating the pension funds from India to Australia, a portion of proceeds becomes subject to Australian taxation. Another key important point is on the insurance policies can be very complex. With the term policies being partially taxable in Australia, it is crucial to review your policies when transiting into Australian tax residency. Finally, both business income and other forms of income are taxable in Australia, regardless of whether you exceed the tax threshold in India. So you can't claim a basic exemption in both countries. So only one country allows you a basic exemption. The balance is fully taxable in the other country. So if you don't pay any taxes up until 2.5 lakhs rupees in India, then you won't get a foreign tax credit, but the entire 2.5 lakhs is taxable in Australia, will be added to your Australian income. These are exempted income in India with no agricultural income tax in India. However, those agricultural incomes are taxable in Australia. Just because it is not taxed in India doesn't mean that it is exempted in Australia. Similarly, the PPF interest is another category that is exempted in India, but is still taxable in Australia. And NRE deposit, a lot of clients got notice on this one because it is exempted in India, but it is fully taxable in Australia. It is important to disclose this information and ensure compliances here. What else needs to be included in your Australian tax return? One critical aspect is reporting overseas assets exceeding 50,000 and more. I will tell you why this becomes very important when you sell your property. When you're disclosing the capital gains, tax authorities may come and say, hang on, last year I know that you hadn't disclosed this information and you are disclosing capital gains this year. Where is your earlier income on this property? So it is a very simple thing to do. If you go ahead and take the clause number 20, where it asks, do you have any overseas assets exceeding 50,000? Please make sure that that is complied properly, so that we don't have to get into any problem in the future. One key consideration is the difference in the financial year between two countries. India follows April to March, while Australia follows July to June. This discrepancies requires a careful income adjustment and reporting. So you have to, adjust the income according to the Australian financial year and disclose it accordingly. We have discussed about all those disclosure part of it, but there is a huge tax planning advantage which is available here, which is a double taxation treaty benefits between India and Australia. Individuals who have paid taxes in India can claim foreign tax credit in their Australian tax return. The rules for the foreign tax credit vary depending on several factors, but they can significantly reduce your tax liability. This is something which all of us should use it to reduce your tax liability. And some of the foreign tax are allowed in full, and some of the tax are allowed partially under the dual tax exemption rules. So let me try and recap what we have discussed so far. Who has to disclose? Permanent residents and citizens. Why you need to disclose? The data matching as well as the Australian tax rules. And what you need to disclose? we have disclosed all those income and the asset categories. At the end of the presentation, let us know if you need any help with lodging your Australian ITR. We offer advisory service to maximize your tax benefits and assist client in challenging situation in India or abroad. Additionally, we have a network of professionals who can help you with Indian property purchases or assist in selling or repatriating the funds to your Australian bank account. You will get a high quality advice from us on time, every time. Just write to us at info@nritaxation.com.au or WhatsApp us, and let's address your questions. Please write your questions in the chat box and we will address them one by one. Thank you very much.